Hello and welcome. We have witnessed a fresh escalation of the US China trade war with a tit for tat approach and China increasing tariffs on US goods to 125%. Now, what does this mean for the world's two largest economies and what does it mean for the rest of the world? To decode this, I'm joined by senior market expert Ajay Bagga. Thank you for your time. I'd like to begin by asking you, when the world's two largest economies witness such escalation day after day, what does it mean for these two economies? Does it mean it completely disrupted trade format and a completely suspended trade format altogether?
See, overall, if you look at it, the biggest producer in the world, China, is having a trade war with the biggest consumer, the US. So, this decoupling will lead to a lot of disruption globally. One, the prices in the US will go up. They will
Mhm.
need to find new sellers for about $500 billion of imports that they were getting from China. I don't know if at that price and at that convenience they can substitute it. Second, the uh, the question of them trading with each other at 125% plus tariffs goes out of the window. So it will become unaffordably high, the goods, and that
Mhm.
second order effect is now coming in. We are seeing shipping lines are talking about cargoes being cancelled. We are hearing about factories in China telling workers not to report for work. We are seeing that even in the US, right now people have warehoused goods for the next couple of months. But I'm
Mhm.
sure shortages on the perishable side will start coming up within a couple of weeks, and then other shortages will come. The third big thing is, what does it mean on a geo-economic sense? Geopolitically, of course, the Cold War was there between the two. Geo-economically, now the world will get split into spheres of influence. Xi Jinping has said he'll be visiting Asian countries next week. He will
Mhm.
try to bring in global south more and more into the China sphere of influence, and he will try to dump the excess Chinese goods into their into the states where they are giving more. They are building the Belt and Road, or they are giving donations, or they are helping out those countries. All those will be forced to take more Chinese goods, starting with our neighbor Pakistan, which is a
Mhm.
dependent economy on China, most of Africa. All this could happen.
Right. And what does this mean for India in particular? Was there any window of opportunity for India?
Yes, there is, especially on electronics, engineering goods, textiles, there is a window. But again, the issue is it's a very volatile situation. It's a policy driven situation, which could be reversed on a policy flourish. So, a reversal of policy could lead to the situation being reversed. So, no new capacity can come in to take advantage of this in the short term until we have clarity on what are the tariffs on India and what will be the durable tariffs on China. Is this posturing still? Is it brinkmanship? Is it one-upmanship? Or will there be actual serious damage on a durable basis? So right now, India cannot invest in new capacity, but whatever capacity we have, we should ratchet it up and run three shifts if needed and produce more and ship it to the US.
Right, and also for businesses and jobs, this uncertainty, this escalation of a trade war, geopolitics, like you were saying, could this then translate into a geopolitical concern altogether? Because it's already an economic war, as it were. Are there further concerns now that we can see in the near term?
Yeah, we would. We would. It is a very interconnected world, and this kind of disruption is unprecedented. And overall, if you see tariffs on US imports go up to 25%, largely because of China. If you take China out of the equation, then it's 10% for most goods and 25% for steel, aluminum, auto. If pharma comes in, we'll see what it is. So, overall, if China is not supplying, then the tariffs come down to 10%, which is still something that the US consumer can tolerate. But the big thing will be replacement of this $500 billion. Just to give you an idea, entire Vietnam imports to US is 150 billion on a country whose GDP is 500 billion. So Vietnam can't step in. India has very small export basket. Capacity is limited. Bangladesh, Mexico could supply some of it, but again, it will be very in terms of that, and especially the consumer goods 60, 70, 80% are made in China, be it furniture, be it other consumer goods, the durables, appliances. Those cannot be made overnight in some other geography. So there will be a shortage, there will be price flares, and that is what China is counting on now. It has taken up the gauntlet thrown by the US, and they're calling it one sided unilateral moves, blackmail of sorts, and they're saying they will fight till the end. So now it is getting, the gloves are off and the boxing is starting.
Right, the gloves are off, but for those like you're saying, concerned about what this means for the world economy and global markets, lastly, what would you say to them? Investors on the edge?
On the edge, its risk off situation is bad. It could improve, as we saw this week, if in case both sides relent and agree to some kind of a midway path. So that's why you can't short also. But going long is very difficult. And what we are seeing, money is going into gold, money is going into Swiss franc, money is going into Japanese yen. So the safe havens are coming up, and there is selling happening in US treasuries, which normally is a big safe haven. But we have reports that Japanese government has been selling, Chinese have been selling US treasuries. So net, there is outflow even from the US treasury. We are seeing the dollar weaken. All those have very big ramifications for the global economy. And normally, a dollar weakening would lead to emerging market flows, but right now it is risk off. So the first money out of the US will flow into Swiss franc and Japanese yen, and then they will start looking at emerging market sovereign bonds and then emerging market equity. We are still at stage one right now in the risk off cycle.
Absolutely, but huge ramifications, like you were explaining our viewers, of this US China, the world's largest economies, in this trade war, and this trade war escalating day after day. Thank you so much for decoding this for our viewers. We will, of course, continue to track the global economy and markets going forward.
Thank you.